When is it a good time to take profits? And could those profits fuel a major rebalance? Fasten your seatbelts, folks. This is going to be a good one. One of the more difficult parts of investing isn't knowing what to buy, it's knowing when to sell. Taking profits can feel like a win, but sell too early and you can risk missing future gains. Wait too long and those profits, well, they can vanish just as fast as they came. When is a good time to take profits? Taking profits can make a lot of sense when an investment has run well ahead of its fundamentals or, well, your original expectations. Maybe that stock or ETF has doubled and now makes up a much larger portion of your portfolio than intended. That's often a cue to consider trimming your position. It can also make sense if your investment thesis has played out or changed for the worse and you want to lock in some gains before uncertainty sets in. In the case of the challenge, I will tell you that I did close 5 positions in May. We're going to look at them a little later in the video for sure. However, right now, I want to pose another question. When is it not a good time to take profits? Selling just because something is up isn't, well, that really isn't a strategy. It's more of a reaction. If your investment is still aligned with your goals and the fundamentals are strong, taking profits too early can absolutely stunt your portfolio's long-term compounding potential. This this is especially true for long-term holders like dividend growers or index ETFs, where the best returns often come from staying invested and not selling every time you get a little bump up. In other words, fundamentals and not emotions should always be your deciding factor in profit taking. As the math will more times than not lead you to a better outcome. This can be very true when you are taking profits strategically to power up a portfolio rebalance. In fact, that is exactly what I did in May. And the fact the market was well into the green for the month really helped to make this a little more dramatic than most of my rebalances tend to be. A sub to the channel is the best way to rebalance some future content. Now that we've plugged the sub, let's get into the challenge portfolio. We're going to start with the stocks that we've not added to in this cycle. We'll start with Diversified Royalty Corporation. Look at that total return, 15.87%. That's not too shabby. We also had, of course, good old Canoe coming in with 31.92%. They're definitely challenging for the GOAT. No ands, ifs, or buts about it. Extendicare coming in at 24.45%. We got Fortis coming in at 26.23%. Oh boy, oh, look at this. London Gold, 62.21%. Holy banana bread. I I think we may be able to crown the GOAT of the month already. That's crazy. Pizza, they're coming in strong, 15.54%. And we've got the iShares S&P TSX Capped Consumer Staples Index ETF. They're respectable, 12.48%. We've also got the iShares S&P TSX Capped Utility Index ETF, XUT, coming in at 8.68%. What a month. And you can see that most of these had double-digit total returns. I like that. I like that quite a bit. So we'll switch gears. We'll look at the stocks that we have added to this time around. We'll start with Bird Construction. We did add 10 more shares, taking us up to 30 in total. And we're at a 33.80% total return on that. They've been on a tear in May. I still love this company a lot. We got Scotiabank. We did add one more share, taking us up to 8 and a 27.28% total return. Canadian Natural Resources, we added 6 more, taking us to 25. Now, they are one of the few negatives in the list this week, negative 0.72%. But as I mentioned last time, this is a stock I will continue to add while they are down, for sure. We also added one more share to Canadian National Railway, taking us up to 7. Now, their total return, 1.51%. It is nice to see them back in the green. We also added 5 more shares of HHIS, taking us up to 50 shares and 6.69% total return on that. We got Hammond Manufacturing. We added 10 more shares, taking us to 60. And they're sitting at a 7.09% total return. Yes, and I get this question a lot. I am still a huge fan of those Hammond stocks. Up next, we have JEPQ. We added 7 more, taking us up to 20 shares. They're also one of the negatives this week, negative 1.10%. We did also add 10 more shares to PPLN, taking us up to 20. So that's 3.68% total return. Now, I will tell you, with pipelines still the talk of the government, I'm very excited to see where this ETF could go. We did add 20 more shares to RMAX, taking us up to 65. Total return currently 3.26%. We added 10 more shares to the Solana ETF, so SOLL, taking us to 16 shares. They currently sitting at 5.77% total return. Timber Creek Financial, we added 10 more shares, taking them to 70. Their total return sitting at 6.95%. We also added 7 more shares to Tcash, taking us up to 28 and a 0.22% total return on that. For our energy play, we added 10 more shares to XEG, taking them up to a total of 50. And that's they are in the negative currently, negative 2.79% on that total return. Okay, let's take a look at my selling behavior in May. I did, as I mentioned earlier, I did sell out of 5 positions in May, and those funds sure helped me add to many of my favorites. We will start with Ryokan. I had 40 shares of them. I sold them all out in total. In total, I made a profit of $9.55 with Ryokan. I do love Ryokan, but with the hit they're taking with the loss of the Bay, it it made sense to me to take the profits and move them. Well, actually, move those into RMAX and Timber Creek Financial. Looking at energy, I did sell 10 shares of TransAlta, so closing that position. I only made a quarter profit in total. Now, I do like TransAlta, but I did want to consolidate my energy position into, well, in this case, XEG and PPLN. I also sold all 20 shares of EBIT for a profit of $30.60. I love EBIT, but I wanted to broaden my crypto exposure. And there's a new ETF. It's a Bitcoin Leaders ETF. It really caught my eye. So we'll look at that in a moment. I did close out of my BCE position. I had 16 shares. Now, I took a loss on this one. I took a loss of $82.30. Oh boy, I felt it was time to move those funds elsewhere instead of, well, watching them stagnate in the communication sector. All right, now the big one, Air Canada. I sold 80 shares, a profit of $401.60. Yes, I pulled the trigger early on the Air Canada swing trade. Of course, I did fully intend to wait for $21. But with their recent earnings, an opportunity presented itself. They nearly got to $20. And I really did not believe the target was in sight this time. So I will buy back in after the 30-day CRA pause if they drop, of course, below $17. I did not redeploy these funds, so that does give me some extra cash in June for sure. All right, let's take a look at the new additions to the challenge. And I only added one new stock this month. That is HBTE. I bought 55 shares at $12.39. And we do have a total return already since I bought that earlier in the month of 6.78%. So this is that Bitcoin Leaders ETF I was talking about. It's called the Harvest Bitcoin Leaders Enhanced Income ETF. It did catch my eye as a good way to add some diversification to my Bitcoin play. They hold a basket of some huge players in the Bitcoin ecosystem like Coinbase, Strategy, and Galaxy Digital. Okay, let's switch our gears to returns. Now, May was a green month for sure, but there were the occasional buying opportunities, especially towards the first half of the month. Looking at the numbers, we did add another $500, taking our investments up to 11,500. The community they added another $14 for a total of $1,015 thus far. A huge thank you to the community. When all is said and done, that added up to, well, $12,515 invested in the challenge. We also received an additional $49.28 in dividends for a dividend total thus far in the challenge of $860.54. When we add in the dividends and the growth, we get a portfolio value of $15,573.64. That green May, oh boy, it gave the challenge a huge shot in the arm as our total return came in at a very, very impressive 24.44%. I do, I do expect that to drop back a wee bit in June, but I would not complain if I am wrong about that. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there is a link below to sign up for that app. In fact, they now have a desktop version as well, so that's not too shabby. According to Blossom, our top 7 represented sectors are, well, we got industrials at the top, 23.4%, energy coming in at 17.6%, fixed income climbing up there, 11.7%, utilities 11.5%, financials 10.9%, real estate 9.0%, and materials coming in at 6.2%. It is time to look at the toad and the go to the portfolio for the last month. Our 5 worst stocks this month are, well, at number 5, we got CNR with a 1.51% total return. This is actually the first time we have had a green stock in the bottom. That goes to show just how green May turned out to be. Coming in at number 4, we have TCSH with a 0.22% total return. Number 3, we finally do get into those negatives. CNQ negative 0.72%. Number 2, JEPQ negative 1.10%. And our total of the month is, well, not Bell because we sold them. So we got a new one. We have the iShares S&P TSX Capped Energy ETF XEG negative 2.79%. Who knows? Maybe if we had a crazy June, we could have a month where everybody's in the green. I can dream. Okay, let's see who is topping the charts this month. Our top 5 best stocks are at number 5, Extendicare 26.23%. Number 4, Scotiabank 27.24%. Number 3, Canoe 31.92%. Coming in at number 2 is Bird Construction. Look at Bird Construction fly, 33.80%. And our go to the month is once again, and we knew it early on, London Gold with that 62.21%. Holy banana bread, that's a nice total. Tune in to the next update when we will do it all over again and see how the market is treating the challenge. I'm excited for sure to see where we are going next and to see if London Gold can hold on to the top spot in the portfolio. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on the Big 6 banks. Thank you for watching, and I will see you in the next video.